Hi, guys. I'm Phil Town from Rule One Investing, and today I want to talk to you about financial resolutions to make in 2021. Okay, well, here we are. We made it to a new year, and things started going off the rails immediately. So this is going to be a really interesting year. I mean, here we are with an assault on the Capitol, the President of the United States being accused of inciting a riot. Let's see, we've got COVID exploding all over the place, all over the world now with a whole new strain that's even worse. Wow. We're starting off with New Year resolutions. It's supposed to be happy time. We're going to really make something happen here. But here's some really good news. The silver lining on this rather large cloud we're starting off with is that amazingly, you can really be a great investor in a year like this. So every new year comes along, you guys. Every new year comes along and everybody makes these resolutions. And I have to tell you that resolutions are really just kind of, for most people, resolutions means I resolve, which means I promise. I resolve, right? I promise. That's a synonym for a resolution. But that ain't the synonym that we're using out there, is it now? Resolutions are casually used as goals. And if you've been following me for a while, you know that I'm not the biggest fan in the world of the idea of goals, right? Because why? Goals are an intention, and the road to hell is paved with them. It's just like we go, yeah, I'm going to be a better person in 2021 and do all the things I never did. And then we kind of feel good about it, right? A promise now, that's serious because that's tied to your character. And that is a whole different world. When you promise something, you resolve something, whole different deal. So I want you this year, when it comes to your finances, now not for working out, and not for sticking your elbow into the refrigerator, but this is for your money, for your family, for creating generational wealth, for doing something that will change the lives for you and your family for generations. This is the year to do it, you guys. This market is capable of making you extremely poor or extremely wealthy. And the difference between those two things isn't volatility or market risk or any of the things your financial advisor tell you. It's how much you know or how much you don't know. That is going to be the difference. So here's a couple of ideas to kind of help you out this year that you might want to consider making a promise to yourself about. So the first thing is, I would consider that you should consider carefully loading up on certain kinds of debt and getting out of other kinds of debt. Okay. So for example, right now, if you have a fairly secure job, if you have a fairly secure amount of assets, so this is definitely not what Susie Orman's going to tell you or David Ramsey, and I love both of them, and they're right all the time. So you can take this for what it's worth. I'm not a financial planner in any way. I'm an investor, and at this point in time, I'm looking out into the future a long way, and what I'm seeing is the devaluation, the deterioration of the dollar by massive printing by the federal government. We printed in the last few years 35% of all the dollars that have ever been printed digitally or in paper in the history of the country. And that is going to come back. That's a chicken that's going to fly back to the roost eventually in the form of inflation long term. And what that means, when there's inflation long term that starts to grow, in general, you want to owe people money. I know that sounds crazy, but it's true. Especially, you want to owe people money when you've got an interest rate on it that's just almost zero. It's almost money that doesn't cost you anything. You're renting money from someone at almost no payment. Okay, so now you got to be careful, and you have to be, you have to know your own circumstances here. But if you have the ability to go out and get a 2.5% loan on your house, and you're looking to build up wealth, I think I would do it right now. I would go out and get that and load it up And then I don't want to sit in cash. So the corollary to an inflation time period is that cash is a bad investment, and you're going to get smoked as cash deteriorates in its buying power. This 1 year, 2020, the American dollar lost 12% of its buying power against the euro. So it's already happening. So you don't want to be in cash, except for maybe just a short period of time while you're waiting for assets to open up and buy at a good price. You want to be in assets. And so that means you want to be in a choice of the assets that I've talked about before. You want to be in gold, or you want, right, some kind of commodity, gold and silver, which are likely to keep up with inflation. And if there's tension in the world, they'll keep up with that. You want to be in bonds, except that long-term bonds, if you start inflation, those long-term bonds are going to go down. So maybe you want to sort of be in short-term bond funds that can constantly turn it over to the next higher bond rate. And they might pay like 2 to 2.5% right now. I think that's what they did last year on a Vanguard short-term bond fund, which is pretty decent. Or you want to own businesses. And of all those, the one I want massively ahead of everything else is I want to own a chunk of a business, because that's the only asset that I know of that has a compounding fact. Okay, maybe breeding cattle or something, but essentially a business is the only asset that really essentially has an internal compounding function. A business can grow on its own. It doesn't have to look for inflation. It doesn't have to look for buyers who are going to move into your area and jack up your real estate. It doesn't have to look for fear to kick up the price of gold. It can do it in all kinds of markets. It can generate higher and higher growing returns. This is called compounding. And this is why over a long period of time, over 200 years, stocks have produced $1 million real return in a $1 investment from 1800, whereas bonds produced a $1,500 or $1,600 return on $1 invested in 1800, and gold produced a $3 return. Real estate, $2 return. So it's really the only game in town. And the real question is, how do you do it? And I would look seriously at these two things. If you load up on debt, not more than you can handle, but debt that's at 2% that you can handle the interest payments on, what you're doing there is shifting on other people's money to an asset that's likely to do much, much better. And with that asset growing, you can pay back that money with cheaper dollars down the road. And that's the great secret. So consider this. And again, I'm not your financial advisor, so be sure that you're competent to make this kind of decision, or go talk to somebody who will probably try to talk you out of that. Okay, so what's bad debt? Bad debt's credit card debt. If I could make a consistent 21% in the market every single year, I would be doing so fantastically good, honestly. I mean, it's our target's 26, so 21%, and that's what some of you are paying on credit cards. So come on, pay that down, and it's like making 21% a year. And then once you get it paid down, start putting money over in something that's going to grow at 21% a year. It'd be a much better deal. All right, second thing, resolve to make a realistic budget and start saving some money. Budgeting doesn't mean deprive yourself. It just means be conservative with your money and, allow for some basic expenses to be higher than you would expect, maybe, right? There's always some, as Charlie Munger says, vicissitudes in life. When you get some vicissitudes, you're going to end up maybe with some unexpected expenses. So kind of beware of that, but just cut out all these money traps that you end up spending money on. Check your credit cards. You'll find that there's 5 things out there you're getting charged $10 a month on. You didn't even know you were getting charged. Stuff like that. Put money in an envelope, and when it's gone, quit going to restaurants. Of course, we're not going to restaurants now, so save that money. It's awesome. All right, next one. Resolve to increase your cash flow. Right? So these kind of things go together, saving your money from money traps and putting that money out there in the form of additional cash flow that you can invest. Ask for a raise carefully. I mean, you got to know where you stand right now in the world of, I'm not at work and my company isn't making any money. So some companies are killing it right now in this market, and some are really struggling. So be careful. Don't be pushing for something that's going to get you in trouble. But if you're really seeing your company crank up, go in there and see if you could maybe convince somebody you're worth a little more money. That's not a bad idea. And then try to gather in passive income that'll create more cash flow. What would that look like? Well, some of the companies I own are paying dividends that are gigantic, right? I've got one that's paying 11% a year right now. You can't get it now because the price is up, but back when I bought it, it's now generating on that basis about 11% a year. That's fantastic. I'm happy to take 11% a year while I wait for the next 10 years to own this business. All right, next thing, resolve to improve yourself. Now, this is a little more, la la land than the rest of these things. If you increase your cash flow, if you lowered your debt, right? I don't know if you improve yourself. You guys are probably like, I improved myself. Yes, I did. I made that one. So maybe, put some actual effort into improving yourself, or don't say that you did it after a year. Maybe, put some money toward re-educating yourself for improving your value in the marketplace of careers. Look out into the future. Are you working for a company that's about to get redundant somehow? So get thinking ahead of yourself and invest in improving yourself. Maybe invest in improving your investment knowledge. And I understand that is a blatant pitch. I'm sorry, but I'm not saying you need to do it with me, but do it. Investing is one of the only ways that the little guys like us can break out and become wealthy with a high degree of certainty if you really learn how to be an investor. So I'm going to tell you, hey, join me at my next workshop. We got one coming up in a couple of weeks, so I'm going to be blatantly, and I'll pitch it. I'm going to plug my own thing here. We have a fantastic virtual workshop. We get rated on a scale of 1 to 10. We get consistently rated like right around 90%, which is better than any product I know of, with the exception of the Peloton, which I think gets rated at 91. So we're better than Apple by a lot, actually. So we're really proud of this workshop. We get huge fans, and I promise you'll be so glad you did it. So now I'd love to hear from you guys. I'm done with my plug. What kind of financial promises are you making to yourself in 2021? Not goals, but promises. And leave your comment below, and I'll be sure and follow up with you guys. Now, thanks for watching, and go play. Hey guys, if you enjoyed this video and you think it was valuable for teaching you more about personal finance, hit the like button and please share the video with your friends. And hey, if you want more investing content, just subscribe to my channel. We got a lot there. Don't forget to click the button on the screen for a free gift. We got great stuff. And thanks again for watching. We love you guys. See ya.